Hey guys, it's Max Convexity. I hope everyone's having a great day. Let's look at these Defiance funds and see how we opened today. All right, well, the market just opened. We're going to look at the strike prices, then we'll look at the charts, and we'll also talk about some of the yield max funds. NVDA, namely, and see what it opened up. It was over 1,000 last time I checked. All right, so this line right here, right now we have 3 of the 6 that are outperforming the benchmark, but it's super early. IWMY, USOY, and TRES are outperforming. All right, so these are the strike prices for the respective funds. This is the premium earned. Look at QQY's premium, 158 points, whereas yesterday the premium was 54 points. It's almost triple. And then we have JEPY earning 24 points, where that's about double of yesterday's premium. And then IWMY premium also went up 40, 50%, something like that. Okay, so it's too early. These prices I don't think are updating live yet. We'll look at the charts and we'll be able to tell in a second, but this is right. This month's total profit loss, these funds are on fire. This QQY is 6.9 million this month. IWMY 5.7, JEPY 3 million. Earnings per share, you know, on the respective funds, they're all killing it this month. All right, a dividend estimate though, that's the good news. The bad news is the dividend estimate's lower, and because volatility goes down, as we know, if you're a regular viewer of this channel, as the market goes up, volatility goes down. Volatility and the market performance are generally inverse. Volatility performs better when the market goes down and vice versa, generally. Well, the problem with that is these are short volatility funds, and they short volatility on a daily basis, so they're very sensitive to changes in volatility. They're the most sensitive. That's why I like them the most. They do the best job at what they're supposed to do. There's not a better fund out there that does a better job of gathering yield than the Defiance funds. That's you know. And if there was, it might be the yield max funds. But no, it's not, because they don't use dailies. The daily options are the most efficient way to gather yield, regardless of what the consequences are. I know there's consequences to it, but in any event. All right, so let's look here at the charts and see what's going on. Okay, we'll just start with Tesla since it was on here. So you can see right there, yellow boxes are Tesla's bullish call strikes. They belong to the fund Tesla. The red boxes belong to the fund Crash. None of the boxes are blowing out. They're, you know, it's right between all the boxes, which is pretty much ideal if you had both of these funds, let's just say, just earning that premium. Okay, I was interested to see really fast how the index is opened. Look at that. Now that's due to NVDA, I'm sure. NVIDIA is the second, third biggest cap on the NASDAQ. It's up there in the top 5 somewhere. And anyway, and it's up that much today, so NVIDIA was up 6% or something last time I saw. Okay, we don't have profit boxes today. Sorry about that. If we did, I can assure you that would be above the profit box. All right, here's for JEPY. I bet it looks similar. Gigantic gap, probably. Wow, it did have a gigantic gap. It opened way above. The box it's in right now is yesterday's, by the way. I didn't do profit boxes last night. It's too hard to do them on the phone. Hopefully I'll get my computer back today, or I might be getting an iPad. I'll run the station from the iPad, I guess. In any event, that's how the SPX opened. We'll look at Russell also. What I always say about Russell, it's the strongest or the weakest on any given day. So we'll see what it is on today's given day. Yep, it's the weakest. Okay. Let's look at NVDA. See who's throwing the party. Now, none of these Tesla fund or Tesla, none of these YieldMax funds I follow had any trades yesterday. So all the information with the strike prices ought to still be correct. NVIDIA's blowing out their strike prices you're getting ready to see. It was 980 is I think what it was. I don't know. I saw there it is. Okay, yeah. Well, actually, they had two of them. It was actually 980 and then 9. Oh my God, these were gigantic. And people are going to gripe about the strikes getting blown out, and I get it and stuff. But at the same time, I drew these boxes to the scale of what they were actually earning. You can see by how tall they were, how thick those premiums were. The 980 strike represents 191% premium. You know, now that's just 1 week out of the month. There's 3 other weeks that they're going to have to average in, but you know, it captured all the premium, you know, and captured some of the upside. It captured from 960 to 980. I mean, 20 points is not nothing, but yeah, it's a huge opportunity loss for sure. Okay, it's just kind of what happens when you trade options. When you do covered calls, it's just, you kind of get used to it. And if you don't like it, you stop trading them, because that happens all the time. And like I say, it's a good problem to have. It means you're picking good stocks, in my opinion. Because the opposite problem is when you sell covered calls on stocks that go down in the same way NVIDIA goes up, and you get stuck holding the bag or having to sell calls that are below your average. And, you know, if you're trying to do the wheel, and so I would much rather get a strike blown out than the alternative. Much rather. Okay, let's see. Let's look at Coinbase here. All right, Coinbase has 3 strikes. They're right in the middle of them. That's, you know, that's a good setup for them, but they're capped. I mean, it doesn't look like, even if Coinbase went up, Coney's going to be going up a lot this week. Coney's pretty close to being capped, and really all these funds are. Let's look at old Mr., which of course we look at Mr. to evaluate Misty because it's the yield fund. I don't care anything about Mr. other than the fact it makes premiums. You know, I'm not a Michael Saylor fanboy, but he's probably a great guy. I don't know, but all right. So when they put this trade on, it was 15% out of the money, according to Retire on Dividends. I watched his show this morning, 15.49 or something. Then it got within, like, it went up 11% the next day, and it almost blew this strike out a couple days ago, and now we're pulling back. I think right now where we sit, we're 7% out of the money or something. So this is the one fund that does have some upside. If Misty does have a little bit of upside, if Mr. started running. Right now, for whatever reason, the indexes are pulling back. Let's look at Bitcoin, and then I can let you guys go. But that kind of, boy, Bitcoin's been on a rampage lately. Ever since my computer broke, it's been good news for Bitcoin, because I haven't been doing many updates, and gosh darn it, that's crazy. That's a good looking chart. That's a good looking chart. All right, let's step back and get a little, boy, cup and handle. It's similar to me to this pattern right here in the middle of the screen. Hopefully this is trying to make a bullish cup and handle. All right, so I'm going to pull back with the bigger perspective. Let's look back at NVIDIA now. See what it looks like on a longer time frame. I get too zoomed in on these shorter time frames sometimes, and you can't see the forest for the trees. You could see, and I mentioned this on my report yesterday, they did have some strikes in this range. They sold the 1,000 and the plus 1,000 strikes back here in March. Now, the market didn't get that far. They sold it ahead of the market, and the market never touched him. The highest the market got back then was 939, something like that, 940. In any event, we just gapped right over that. We jumped over that level. So we'll see. We'll see what they say. Now, the thing about NVDA, they also announced a 10-for-1 stock split. So when you have NVIDIA trading for $100 a share, it's going to make it a lot more attractive to small traders, because if you want to get an even 100 shares, which in the old days, they used to incentivize you to buy what they used to call even lots, 100 shares. But in any event, so when you have 100 shares on a $1,000 stock, it makes an expensive stock. It is the same thing if you like to trade options. I like to sell put spreads and do different things on individual stocks sometimes. Anyway, when you have a stock that's that expensive,